everyone, my name is Jolene Schaefer, and I'm the Marketing Coordinator for SWK Technologies. I'd like to welcome you to our webinar, How to See 2020 in Tax Compliance This Year, presented by Avalara. A little housekeeping before we get started. Everyone has been placed on mute to keep the background noise down. However, you can submit any questions you have throughout the webinar. To submit a question, look for the question section in your GoToWebinar. We will answer all questions at the end of the presentation. We are recording this presentation and it will be distributed tomorrow to all attendees, as well as to those who registered but were not able to attend. Please take a moment at the end of the presentation to answer our 2-question survey. With that said, we appreciate you taking time out of your busy day to attend our webinar. We are here to help you get the most out of your software solutions and help you find an easier way to run your business by providing you with software and industry knowledge, tools, and support whenever you need it. We've invited Avalara to present today because they are the industry experts on tax compliance. So whether you're here doing research for a new solution or you're just here to learn, we'd like to encourage you to ask any questions throughout the webinar. Lastly, as a quick reminder, SWK is constantly sharing important updates and software tips and tricks on our social media channels. So we encourage you to follow us on Twitter, LinkedIn, Facebook, and subscribe to our YouTube channel. Without further ado, I'll hand it over to Nate and Kevin.
All right, thank you, Jolene. Hope everybody's doing well, and thank you so much for jumping on the line here today and taking the time out of your schedule. This is Kevin Anderson, and I'd like to take a quick moment to introduce myself and my colleague Nate Curtis, who both of us have been working here at Avalara for the past couple years and working with Sage for the majority of that time, and we're newly working with SWK. But what we're going to be doing here today, let me pull up an agenda, what we're going to be going through. What we're going to be doing here today is just jumping through some of the biggest changes that have happened to sales tax compliance over the last couple years. And so once we're able to really detail out those changes, make sure we're all on the same page, we're going to dive into some of the best practices that businesses that Nate and I work with, that businesses are employing to address these changes. And of those best practices, we'll highlight, for the most part, sales tax automation, and then we'll also review the Streamlined Sales Tax program as a best practice in addressing change. After that, we'll hang out for a little bit and address any questions that you guys might have, and then that'll pretty much wrap up our time here. So without further ado, and before we jump into some of the specific changes to sales tax compliance, I do want to just bring up, again, I'm aware that not everybody is familiar with Avalara, but I do want to bring up just some information around Avalara as a company and really why we're the ones given this presentation today. Avalara has been a partner with Sage over the last roughly about 12 or 13 years. And what that really speaks to is just that we have a great working relationship. Our companies work well together, and we actually do integrate, and we have certified and fully maintained integrations, and we work well with all of the different Sage platforms that we're looking at here on the board. And really, when we're talking about sales tax within Sage, what Avalara helps and where we assist is that we are taking those processes and the everything that's done within the native functionality of Sage to assist with sales tax compliance, and we overhaul those, and that's really the areas that we focus on. So just so you know, when we get into a little bit more around the software or conversations around the software, that's what we're really focusing on, is being able to assist with bolstering that native functionality to ensure your compliance and mitigate the risk of audits. All right. So with that, all of that being said, I do want to walk through really what the biggest change to sales tax compliance has been over the last couple of years, and that is economic nexus. And I'm sure that everybody on the line has heard in some way, shape, or form about economic nexus or remote seller nexus. What I would like to take one step back and just get a good baseline definition so that we're all on the same page. Economic nexus was introduced, or the precedent for it was set back in July of 2018, and that really gave the states, the Supreme Court gave the states the ability to create an obligation for a business to establish and maintain sales tax compliance within their state, not based off of any of the old or traditional rules, but really only based off of how much a business sells into that state throughout a year. Now, with that, the big change and really the big focus of our conversation is going to be that with the old rules, the physical presence nexus laws, businesses were really able to, for lack of a better term, pick and choose where they were going to establish and maintain compliance, or where they had to establish and maintain compliance. Again, when we talk about physical nexus, we're talking about a physical location, sending employees into a state, attending trade shows, holding inventory in a state, things of that nature. These business activities that a business could pick and choose, or choose whether or not they participated in, and if they did not choose, they were then not obligated to establish and maintain compliance. And the biggest shift that's happened over the last 2 years is now with economic nexus, that will, because the states are creating that obligation based off of your sales and only your sales, instead of choosing where you maintain compliance, it's now monitoring where you need to establish and maintain compliance moving forward. And just to give a little bit of some more details around how this landscape has changed. So July 2018, these laws are approved. About 25 or about 30 states jumped on board and said they were going to start enforcing these new laws. And that was in January of 2019. By December of 2019, 42 states are actively enforcing sales tax economic nexus. And so as businesses are selling and going about their day-to-day activities, if you are selling into any states that are not your home state and are a part of these 42 states enforcing economic nexus, then there's a chance that you've created this new obligation with a new state to maintain sales tax compliance. Now, this is affecting about roughly 90% of businesses. And one disservice that happened through when these laws were first introduced is a lot of the media, they referred to these new laws as the e-commerce sales tax laws or the internet sales tax laws, and it gave the impression that these laws only applied to sales made online. Now, that is not the case. In fact, the majority of states that are enforcing these laws are looking at gross revenue and gross number of shipments being sold into their states as creating that obligation to collect and remit sales tax. And therefore, really no business if you are making a sale outside of your state, it is something that needs to be monitored. Now, sales tax, it's a fun little, the fun part about sales tax is that no two states are the same. And so while there are some states that are looking at total sales, there are other states that are only looking at taxable sales, and so on and so forth. So a couple examples of that is that Colorado does have they've put in place a threshold of $100,000. So if you cross $100,000 of sales in Colorado, you are then required, or that creates the obligation, that creates Nexus to maintain compliance moving forward. And Colorado has chosen to count exempt sales. So they're looking at gross sales into their state, where California has changed a little bit or differs a bit from that. And they actually are looking to see if a business crosses $500,000 worth of sales within a year. And they're only counting the sale of where there's a shipment attached. So they're only looking at products, but they are counting exempt products in towards that total. But if you're selling services, that does not apply to their threshold. And lastly, just to show that there is such a degree, the laws vary so much state to state. Tennessee almost has the exact same threshold as California, but they do not count any exempt sales towards their threshold. And so each of these states, each of these 42 states has their own set of laws that they have put in place. And that is what you need to monitor, again, your activity versus those laws, to see whether or not you've created a new obligation. Now, to complicate things even more, none of the old rules of physical presence nexus have gone away. And so when you're looking at a landscape of where your business needs to establish and maintain compliance, you have to take into account all of the old physical nexus laws, which again are the property, any physical or employees, any activity through partners, things along those lines that can be tied back to a physical presence within the state. And then on top of all those old rules, you also now need to apply the 42 new rules for economic nexus. Now, that's a very big burden. And so what I'd like to do is flip over to my colleague, Nate, and he's going to walk through some of the best practices that businesses are using today in order to understand exactly what they're up against when addressing these new laws.
All right, yeah, thank you, Kevin. Well, as Kevin mentioned, the tax landscape, it's always changing. And as he mentioned, it's a huge burden to keep up with. And, you know, although Kevin and I enjoy talking about tax on a daily basis, not everyone does. So, you know, it's a big project to keep up with in every state. And on top of just the changing laws, some of the laws may not even be relevant to you. Some may be extremely relevant to you and may matter a lot. So what do these changes that we've talked about mean for you and your business? You know, as Kevin mentioned, for years, the burden and the worry has been on physical nexus, which is still probably more complicated than you might have initially realized. There are a lot of customers that come to us, I think that are looking for those economic nexus thresholds. We do nexus studies and they find out that they actually already had physical nexus. We see that quite a bit. So physical nexus is still more complicated than we thought, but with these new economic nexus laws, you know, it's your customer driving where you have that obligation to file and collect and remit sales tax. So most businesses today, just flat out that we see, again, we both talk to businesses on a daily basis. Most businesses today, even if 2 years ago they were crystal clear they only had to file in this one state or two states, most businesses today need to collect in at least one additional state than they were collecting in a couple of years ago. That's just the nature of what this law has created. And similar to fingerprints, no two states have the exact same laws. None are exactly the same. You know, there's differing nexus triggers. So as Kevin kind of pointed out, you know, one state might only require economic threshold based on retail sales. Another state might say, hey, we don't care that most of your sales are tax exempt. We still are counting that towards our economic nexus threshold. You know, one state might have one state tax rate for across the board, and another state like Colorado's a really good or bad example. You know, two people or two locations on the same street might have different tax rates. You know, states vary by filing schedules, by, you know, local jurisdictional rules, taxability of certain products. One product may be not taxed at all in one state and taxed at the highest rate in another state. So just keeping up with all of this can tie up a ton of resources. And, you know, automation is a great solution to helping really simplify and reduce your workload around calculating sales tax, Nexus monitoring, collecting and keeping up to date exemption certificates from your customers, and being able to automate and file those state and local tax returns. So automation is a great solution, but where do we start? Where do we begin? So what should I do next ultimately? So first, you have to find out, your first step should be to find out the impact of how these new economic nexus laws impact your business. Again, automation is our bread and butter, but we have to be sure that you are clear where we need to apply that automation. If you come to us and say, hey, we want to automate, sales tax compliance in these 2 states, we can show you how the software can do that. But if in reality you should be filing in 10 states, the software is only going to know what you tell it. So step 1 is to find out where you have obligations. So step 1 is to talk to your current sales and local tax CPA. They may have some resources to help you look into the new tax laws around the country. If you don't have a current CPA that you work with that can assist you, we do have an extensive directory of those professionals that can work with you, that we are in contact with. And after the webinar, if you contact us, we can certainly put you in touch with those individuals. But the second step is figuring out that Nexus obligation. Again, your CPA may be able to offer the service to you, helping you find out where you've triggered Nexus, what states, what your exposure might be in those states. But here at Avalara, we do also have a full tax advisory team that is made up of former CPAs and former State Department of Revenue professionals who have kind of been on the other side of tax compliance and know it from both sides. And so we have that team on staff here who can assist you as well. Again, Kevin, I think mentioned this, but when we do these Nexus studies, we've actually seen 81% of these Nexus studies come back to show that in addition to maybe triggering a new state with economic Nexus reasons, businesses have also triggered a new state they need to file in based on those physical Nexus kind of older laws. And we look at it all. We look at all the reasons you would need and have obligation to file in a state. We put all that in the study. So where to start? Find out where you have Nexus. Whether you ask us to do that or someone else is fine, but just find that out for sure where you have Nexus obligations. And with that, I will hand it off to Kevin to talk a little bit about the automation that would come next.
All right, thank you, Nate. All right, so everybody, I do want to take 1 second, and if you can look to your right and look to your left, if anybody has dozed off, go ahead and tap them and make sure that they are fully awake, because you just sat through about 20 minutes of nothing but sales tax talk, and that alone should get a round of applause. So now that we've kind of gone through what the changes are, really what the worries are, that there's a whole lot of new laws that are affecting 90% of businesses, and that the best next step is to understand and to conduct a formal investigation into where you are required to establish and maintain compliance. Now we're going to shift gears a little bit and start talking about, once you know what those new obligations are, what all needs to be accounted for in order to maintain your compliance. And so I'm going to pull up, and so what we're looking at here is sales tax is like an iceberg, where it looks pretty easy on top or minimal on top, but just as the Titanic, there's a whole lot going on underneath. And we have, I don't want to say beat to death, but we have covered extensively Nexus. And really, when we're pulling up the note about Nexus, we're really just talking about understanding what you're up against, where you have an obligation to collect and remit sales tax or establish and maintain compliance. Once you have that clear vision, the next step is that you do need to investigate at each of these states exactly how the different jurisdictions tax the products that you guys are selling. Again, with states being, or state sales tax being like a fingerprint, no two are the same. You will need to do a little bit of a deep dive there to better understand exactly what all is taxable, non-taxable, taxed at a impartial rate, and what jurisdictions apply. From there, you're gonna have to learn, and Nate did a good job explaining that jurisdictions really don't have a rhyme or reason once you're within a state. So the state sales tax rate, that makes pretty good sense. But then once you start divvying up counties, cities, and specialty taxes, there's really no rhyme or reason. And so every shipment that you are sending into that state needs to have a sales tax calculation based off of that specific location. Now, the next piece, that again is for sales tax determinations on orders that are to an end user or are taxable. Now, in the case of exempt sales, that's pretty easy. You're just given a $0 determination, but really that's only half of the battle. In these new states, as you're registering with them, all of those customers that you're selling to that are exempt, you now need to collect an exemption certificate from those customers, make sure that it's valid, make sure that it is filled out correctly, not expired, and then keep that on file in the case of an audit. So that's what's going to alleviate that piece of paper is what's going to tell the auditor that you did not need to charge sales tax and that that $0 determination was in fact correct and you're not liable for any of the sales tax due. Another piece to keep in mind as you're collecting these exemption certificates is that in new states, a lot of states have an expiration date for them. And so they are valid for between 1 and 5 years, but they do need to be refreshed. The next sticking point for sales tax compliance is oftentimes, especially as you're expanding, learning the new filing rules. So there's some pretty easy states out there. The one that pops into my head is Michigan, where they have one filing, one piece of paper that everybody files on, or one form. You file and remit it to the state. Life's pretty good, and moving forward. The opposite end of the spectrum there is Colorado, where Colorado, each county and city has the authority, now not all of them apply this, but a lot of them do, to require their own unique filing according to their own filing frequency. And so that can get up into the high 80s of jurisdictions that you actually need to file with individually on their own separate form. And the last piece is keeping all that information ready to go in the case of an audit, being able to provide that to the auditor and make sure that they have everything they need to check your work. And so what I'm going to now, again, these are kind of 6 points that are pain points, especially as you're expanding into new states, especially as you're addressing what was once unaddressed exposure. We've worked pretty good on explaining how Nexus, how Avalara assists with discovering exactly what landscape you're up against. And what I'm going to do now is shift over into the software side of things. And so I'm going to pull up a model of how Avalara functions and how we work and interact with the different pieces of compliance to ease these pain points that most businesses face when addressing their sales tax compliance. And so as I pull this up, Avalara is represented up here on the top half of the screen by this cloud. We are a cloud-based solution, and every piece of our solution is going to be represented up here towards the top. And then everybody that we're interacting with, or every piece of compliance that we're interacting with, is going to be down here towards on the bottom half of the screen. And just to start off with how we ease compliance on the case or for your customers, when we're talking about exempt sales, again, we have two sides of a coin. One of them is the $0 determination. That's the easy part. The difficult part is getting those exemption certificates from your entire customer base, especially new ones that you haven't had to in the past, and keeping those on file and audit ready. And so Avalara's goal with cert capture is to keep your exemption certificate portfolio audit ready at all times. And one of the first ways that we assist with that is any customers that you need an exemption certificate from, you're able to populate within cert capture. So now we know who needs an exemption certificate, and you can start an email campaign. And again, this is a mass email that goes out to your customers. And then within that request, we also provide a web link and a login and username where they're going to be able to fill out an exemption certificate, quote unquote, on the fly. They're going to be able to sign that exemption certificate from their phone. On top of that, Avalara is walking them through the exemption certificate that they're filling out, so it is being filled out correctly. And once they sign it, that shoots back over into CertCapture, and you now have a valid exemption certificate on file that's attached to your customer account that mirrors the information from what is in Sage. I spoke a little bit about how exemption certificates, once you have them, that doesn't necessarily that they're good forever. And so moving forward, once you have that audit-ready exemption certificate portfolio, if there are any gaps, whether it be expired exemption certificates, invalid, changing contacts, things of that nature, you'd be able to, Avalara provides a report of all new exemption certificates that you'll need to collect, and you can get on top of that and get those exemption certificates as quick as possible, so you have an airtight audit or an audit-ready exemption certificate portfolio. Now, when it comes to again the other side of the coin, or providing $0 determinations for all of the exempt sales, how Avalara functions is that we do integrate into your Sage system. If you guys are using a shopping cart, we integrate there as well, or a separate CRM, really any IT stack that you guys are utilizing. And that way, whenever a sales order is being created, we're going to pull all the sales tax pertinent information from that sales order, from that shopping cart, or from that quote. And we're going to run that through our tax engine. Now, one of the first pieces that we look at is the customer account or the customer number that's being sold to. And if that customer number is a exempt customer with a certificate on file, we're going to provide that $0 determination right within your native or within Sage or the shopping cart or the IT system. The next thing that we look at, let's say, so that's in the case of an exempt customer. If we're looking at a taxable sale, what we're going to look at is the ship to address or the ship from, depending on the rules that apply, the products that are being sold, and also the totals. And we're going to be able to use that information and run that through our tax engine that's kept up to date by 400 people. It's kept up to date with all sales tax content in real time, and we're going to be able to provide that guaranteed sales tax determination within within Sage and all of the IT platforms that you're utilizing. And so that way, at the end of the day, you have a audit-ready exemption certificate portfolio. You then have all of your transaction information and sales tax information being provided by Avalara. We're taking record of all of your sales tax liability. And from there, we are able to file and remit on your behalf to the states. And so we will fill out the form that we're filing on your behalf. We'll pay the states, we'll file the form, and we'll provide you with a confirmation of payment, a copy of the return that we filed on your behalf, and then a tracking number for that payment to the state. And that, again, just to quickly recap, that is how Avalara does assist with being able to ensure your compliance as you guys are moving into these new states, minimize your risk as much as possible, being able to provide you with guarantees around your sales tax determinations as well as returns, and really keeps that airtight and audit ready. All right. And so with that, I do want to turn this over to Nate again, and Nate is going to walk through. So again, we now have we now see how automation fits into addressing sales tax compliance, and Nate's going to review the Streamlined Sales Tax program and why it is oftentimes a very good fit for businesses addressing remote seller or economic nexus.
Absolutely. All right, so got the slide. Yeah, so economic nexus laws and really any tax laws have, create quite the headache. And we appreciate you sticking with us this far through talking about tax again. But there is some good news, which I get excited to share. So I want to tell you about the Streamlined Sales Tax program. that we tend to call SST for short. So when you hear us saying SST, that's what we're referring to. And we think you'll find this beneficial. So in our conversations with potential customers here at Avalara, SST appears to be a pretty well-kept secret. And ultimately, I guess that's my and Kevin's fault. We need to make sure we're spreading the word about it. When we do calls with customers these days, you usually know about the economic nexus ruling, the Wayfair versus South Dakota ruling that has created that new tax issue. But I would say it's pretty rare that I jump on the phone with a potential customer and they say they've heard of SST before speaking with us. So SST simply is a collective program carried by a collection of about 24 states with basically two missions. The first, to reduce tax burden on companies filing in multiple states, which I always kind of laugh a little bit internally. It's like, you guys created the tax burden, but hey, they're creating a program now to reduce that tax burden a little bit. And it also tries to create some level of standardization of sales tax processes across states. Again, that's where a lot of these headaches come, is that every state operates differently. So the SST program has tried to create some level of standardizing sales tax compliance across those states. So this program is designed to simplify sales tax compliance. If you qualify for the SST program, and to be clear, you qualify by state. So it's not like you qualify for the SST program and you qualify for it. Every SST state, from state to state of the 24 member states, if you're eligible for the SST program as a volunteer seller, you will receive, but you have access to free registration, so you can get registered in that state for free. You have access to free tax calculations using a program, software like AvaTax through Avalara. We can calculate those tax transactions for you in those states for free. And finally, we can file state and local returns on your behalf for free. So again, I told you I'd have some good news. Free is usually good news. So to have, in order to be able to, register in the SST program, you have to work with a CSP, a certified service provider, of which Avalara is one of, I think 5 or 6 companies out there that have that ability. It's a pretty small group of companies that have been certified in the SST program. To get access to SST through Avalara, you have to qualify as a volunteer seller, which can be broken down pretty simply to figure this out if you might qualify or not. It essentially applies to either you're having employees or physical property in that state. So a few kind of red flags that would eliminate you from being able to have that SST access in that state. If you have a fixed place of business in the state for more than 30 days. So if you opened a retail store in that state 3 months ago, you wouldn't be able to qualify, or a warehouse or something like that. Now, if you had a pop-up shop for 2 weeks, that would be under the 30-day limit, and you could still qualify for the SST program in that state. Additionally, you can't have more than $50,000 of property or payroll in that state. So typically, for most companies, if you have a remote employee, I would say most of those remote employees are typically making, close to or over that $50,000 number. So if you have an employee in that state, you may not qualify. And if you have, again, property in that state that costs more than $50,000, you may not qualify. Same thing for a percentage of your business, basically. So if a percentage of your payroll is over 25% in that state, or if over 25% of your company's total property is in that state, you would not qualify. But those are the only real limitations that would disqualify your company from being able to take advantage of the SST program. So again, if you think you're operating in, as you go through these Nexus studies that we talked about, talking to your accountant or talking to Avalara, and you find their states you may start filing in, this could be a great program for you. And the program continues to evolve and grow. Other states are starting to copy elements of the program on their own. Pennsylvania actually created their own CSP program, so they're not officially an SST state, but they do have a very similar program that would allow for some of the same free benefits of the SST states. Other states will continue to hopefully join the SST program or begin their own program as we grow through this. So finally, sales tax automation is smart. It's smarter today than it ever has been with all the different laws nationwide to be able to automate calculating tax, monitoring Nexus, filing returns, monitoring exemption certificates, all those processes to automate is smart. But for doing it for free, that seems brilliant. So this is a program we were excited to share with everyone on the call today. Hope that was some helpful information for you. And with that, that is the information you have for today. So we're going to open it up to some question and Q&A, I believe.
Good deal.
Thank you so much, Kevin and Nate. We'll now open it up for questions. If you have any questions, please enter them into the question section of your GoToWebinar. We'll give that a minute or two in case any come through. And just a reminder, everyone, we do have subject matter experts here, so this is a great opportunity to have your questions answered in real time.
So while we're waiting for questions, one thing that I did want to touch on around the SST program is that one reason that that it wasn't quite as popular in years past, the SST program itself, is that it used to be an all or nothing program where you would need to register with all 24 states, or you would not be able to participate as a volunteer. The program itself came to the realization that was hindering a lot of businesses. You can imagine if you only had an obligation in one of the 24 states, and then the program was saying, no, you need to register in all 24, that would stop you from wanting to do that. They changed that about 9 months ago. And so now it's any number of states, any state that you create an obligation in, if you qualify as a volunteer, you're then able to utilize a certified service provider to maintain your compliance for free. And so you can pick and choose.
Okay, we do have a few questions coming through. So the first one is, can you also work with Acumatica?
Yes. Yep. So along with those, we're focusing on the Sage integrations that we have today, but our relationship with Acumatica is very similar. And so, yes, short answer is yes.
Perfect. And then another one just came through. Does Avalara communicate both ways regarding updating tax rates?
So, and in a way, yes. So because we're a cloud-based solution, we're actually integrated into Sage. So we're overriding Sage's what you guys would see as your tax schedule that you guys assign to either customers or to the sales order. That's overrid to Avatax, and that's what tells Sage to rely on Avalara for any sales tax determinations. So you're actually getting a real-time guaranteed sales tax determination that's not based off of a rate table. It's being processed by our tax engine, and that's how we're able to take into account product taxability, the exact location of where the shipment's going to, and then provide that back directly within Sage.
Perfect. And then we have one more. Do you need to evaluate your tax obligation on a rolling 12-month period or just the taxation period for the state?
That's a good question. So when it comes to remote seller Nexus, that, again, being able to have a baseline, investigate your business activities over the last 12 months and get a good baseline of where those obligations are today, that's going to give you, again, that foundation. Through Avalara, we actually monitor, when it comes to economic nexus, we monitor that moving forward. And so because we see transactions coming across your Sage platform, we're then able to tally those against the different thresholds that states have in place. I do suggest once a year or once every 18 months, conducting a formal investigation into sales tax obligations, because, again, just to make sure that there's no other way that you've created a new obligation with the state.
Perfect. And I think that that's all for our questions. So thank you so much, Nate and Kevin, for your time and for your very informative presentation. I'm sure we all appreciated it.
Yeah, thank you, Jolene. If any other questions do come in, feel free to send those to us, and we'll try to get an answer back out to you.
Yep.
Perfect. Thank you. Have a great rest of your day, everyone.
All right.
Thanks,
Thank you,
everyone.
everybody. Thank you, Jolene.